What if I told you the key to building serious wealth wasn't about high-risk gambles, but about silent, systematic strategies? These are the exact methods that turned a 67-year-old man's $10,000 into over $5 million, all without any fanfare. Stay tuned, because I'm about to reveal the 7 assets they use. Have you ever noticed how some investors seem to get rich, seemingly out of nowhere? Back in 2019, I met a 67-year-old man who had quietly, almost invisibly, turned $10,000 into $5.3 million. There were no flashy Instagram posts, no ads for day trading courses, no crypto coach gimmicks. He simply used silent strategies that true millionaires have been employing for decades. Wealth Topmax warmly welcomes you. This channel is dedicated to sharing wealth-building mindsets for those seeking financial and time freedom. If you don't want to miss out on future valuable insights, consider subscribing for free and turning on the notification bell. While everyone else is busy chasing the next Nvidia or Bitcoin, there's a select group of investors who are building fortunes discreetly and systematically. And the most incredible part? They use assets so straightforward that most people completely overlook them. Today, I'm going to pull back the curtain on the 7 secret assets that the top 1% use to multiply their wealth, far away from the spotlight. These are the very same investments that have turned ordinary people into millionaires, without them ever needing to predict the next market boom or risk everything on speculative bets. Think about this. Warren Buffett, arguably the greatest investor of all time, built 99% of his wealth after turning 50 by using strategies just like these. And you know what's even more interesting? In his private meetings, he recommends these exact same types of assets to his close friends who want to preserve and grow their wealth without drawing unwanted attention. What you're about to learn today isn't just a list of investments. It's a complete system that the financial elite use to create wealth consistently. And pay close attention, because the 7th asset is the most powerful of all. It's the key that multiplies the potential of all the others. Missing this final secret would be like leaving millions of dollars on the table. The markets are on the verge of one of the biggest transformations we've seen in decades. Those who understand and implement these 7 assets now will be perfectly positioned to multiply their wealth in the years ahead. Let's start with the first one, the investment that serves as the foundation of this entire system, used by millionaires to grow their wealth quietly, no matter what happens in the market. Asset 1, index funds and ETFs, the updated strategy. The single biggest mistake that everyday investors make is trying to time the market. But what if I told you that the most successful investors don't waste a second on that? They don't try to predict the perfect moment to buy or sell. Instead, they follow an almost invisible method that builds wealth effortlessly. And this strategy? It's hidden within ETFs, but not in the way most people use them. While many are trying to guess the market's next move, the smartest investors do something much simpler. They automate their contributions. Just think about it. If you had invested a mere $1,000 per month into the S&P 500 over the last 20 years, you would have silently accumulated over $1 million. No complicated decisions needed. This is how real wealth is built, not through risky bets, but with unwavering consistency and discipline. But here's the secret that few people know. True millionaires don't just invest in generic ETFs like VOO. They strategically choose sectors that are positioned for long-term growth. Think QQQ for technology, VIG for companies that consistently increase their dividends, or SEHD for stable, reliable income. It's like owning a small piece of the most profitable companies in the world without anyone ever noticing. And there's more. There's an extra layer to this that very few investors know about. Leveraged ETFs like IPRAIO for the S&P 500 3X and TQQ for the Nasdaq 3X. When used strategically, these can amplify your gains. Now, these aren't meant for risky bets, but as a small, calculated part of a well-structured portfolio, a small allocation can make a massive difference in your results, all without drawing attention. The best part? You don't need to be a financial genius. Just set up automatic monthly investments, choose your allocation wisely, and let time do the heavy lifting for you. This is how the wealthy build their fortunes, not overnight, but through silent, efficient strategies that make their money grow effortlessly. But while ETFs are a core secret of the wealthy, our next asset can be even more profitable, and almost no one is talking about it. Imagine a real estate investment that generates steady income without you ever having to deal with tenants or maintenance. In this next asset, I'll reveal exactly how it works. Asset 2, self-storage units. When people think about real estate investing, they usually picture houses, apartments, or maybe office buildings. But the smartest investors are putting their money into something very different and incredibly profitable. It's a type of property that almost no one thinks about, yet it generates a steady stream of income without the hassle of difficult tenants or high maintenance costs. You see, while traditional real estate requires constant repairs and dealing with problematic tenants, self-storage units work in an entirely different way. People always need extra space, whether it's to store furniture, business documents, or seasonal items. And the best part is, the demand doesn't really depend on economic conditions. During good times, businesses rent storage to expand. During downturns, people need to downsize their homes. What most people don't realize is that you don't need to buy an entire self-storage facility to get in on this. There are specialized REITs like public storage, PSA, and extra space storage, EXR, that let you invest in this sector with small amounts of money. Imagine receiving monthly dividends from hundreds of storage facilities across the country without having to manage a single one. And here's something almost no one talks about. Self-storage has one of the highest profit margins in the entire real estate sector. With low operational costs and recurring revenue, it's not uncommon to see profit margins soar above 60%. Compare that to residential properties, which often operate with much lower margins because of constant maintenance and tenant issues. The leases are short and flexible, but most customers end up keeping their units for months or even years. This means you get a predictable cash flow without the headaches of long-term leases, complex renewals, or complicated rental laws. And during times of inflation, rental prices can be adjusted quickly, protecting your investment. While traditional real estate often struggles during downturns, self-storage remains remarkably stable. After all, people always need extra space, no matter what the economy is doing. Are you enjoying these silent investment strategies? Keep in mind, we still have 5 even more powerful assets to reveal. But before we continue, leave a comment saying, "I'm loving these tips, so I know to bring more content like this." Have you done it? Great. Let's move on to the next secret asset. Asset 3. Life insurance as an investment. When you hear the term life insurance, you probably think of a monthly expense that only benefits your heirs after you're gone. But what if I told you that the wealthy use life insurance as a powerful tool for wealth growth, taking advantage of unique tax benefits and accessing cash while they're still alive? Millionaires don't see life insurance as just family protection. They use specific policies that act like a private bank, allowing them to accumulate wealth without paying taxes on the gains. A whole life insurance policy, for instance, builds cash value over the years. This money can be accessed at any time, tax-free, without you needing to sell off other investments. Think about it. While most people are paying interest to banks, the wealthy are financing their own ventures using their insurance policies. Instead of relying on expensive bank loans, they borrow from their own policies, pay themselves back, and keep growing their wealth without any bank fees or taxes. It's like having your own private bank, but without all the bureaucracy. But there's an even more strategic option called Indexed Universal Life, or IUL. This gives you the best of both worlds. When the market goes up, your money grows with it. When the market drops, you lose nothing. Imagine participating in the stock market's gains without ever taking on the risk of market crashes. That's exactly what an IUL offers. Most financial advisors don't talk about this because they prefer selling more traditional products. But the wealthy know that a well-structured policy can be one of the most efficient ways to build long-term wealth. It's no surprise that top entrepreneurs and investors have been using this strategy for decades. The best part is you can start with modest monthly contributions and increase them as your income grows. And unlike other investments, the gains aren't taxed while the money grows inside the policy. It's a completely legal way to shield your wealth from income tax. But if life insurance can be turned into a silent growth engine, the next asset is even more powerful. Imagine investing in premium real estate without ever having to buy a single property. In the next section, I'll show you exactly how the wealthy do it. Asset 4. REITs, Real Estate Investment Trusts. When people talk about investing in real estate, most of them imagine buying houses, apartments, or office buildings. But there's a shortcut that the smartest investors use to profit from real estate without ever needing to buy a single property. It's an asset that generates passive income, grows over the long term, and can be accessed with just a few dollars. The problem with investing in physical real estate is that it's not liquid. If you need money fast, selling a house or a building can take months. But with REITs, you can sell your stake in a matter of seconds. Even better, you receive recurring dividends without ever having to deal with tenants, maintenance, or renovations. Some REITs pay yields above 5% per year, in addition to their long-term appreciation. Now, most people think about residential or commercial properties, but the wealthy often focus on strategic real estate niches that are quietly growing. Data centers are a perfect example. If you had invested in REITs like Equinix, EQIX, or Digital Realty, DLR, 10 years ago, you would have multiplied your money several times over, all without buying a single building. Another sector the wealthy love is healthcare REITs like Ventas, VTR, and Welltower or Well. They invest in hospitals, clinics, and senior housing. Properties that generate consistent income regardless of economic cycles. After all, people always need medical care no matter what's happening in the economy. The secret here is to diversify across different real estate sectors. While one sector might be going through some tough times, others will continue to grow. It's like having a portfolio of premium properties spread across the country, but without any of the headaches of direct management. And the best part is, you can start with much smaller amounts than what you'd need to buy even a single property. While many people are trying to time the perfect moment to buy real estate, smart investors simply accumulate REITs over time, reinvesting the dividends to create a powerful snowball effect. It's a discreet and highly efficient way to build real estate wealth without drawing attention. But if REITs are a smart way to invest in real estate, the next asset puts you on the other side of the game. What if, instead of borrowing money from the bank, you could become the bank? In the next section, I'll reveal how the most discreet investors do exactly that. Asset 5. Private lending. Most people spend their entire lives borrowing money from banks, paying interest, and accumulating debt. But real investors do the exact opposite. They become the bank. While the majority struggles to get credit, the wealthy find ways to lend their money out and profit from the interest, ensuring a stable and secure cash flow. Banks have known this for centuries. The most profitable money is the money that's loaned out at interest. And discreet investors have figured out how to do this privately and safely. They lend money to individuals and small businesses at fixed interest rates, always requiring real collateral as security. For instance, if you lend $50,000 to a real estate investor at 10% per year, you make $5,000 a year without lifting a finger. And if they don't pay, you get the property as collateral. One of the safest ways to do this is through what's called real estate hard money loans. You lend money to real estate investors who need quick capital, using the property itself as collateral. If the borrower doesn't pay you back, you acquire the property at a significant discount. It's a win-win situation. You either collect high interest or you acquire a valuable asset for well below its market value. For those who prefer to start with smaller amounts, there are peer-to-peer lending platforms like Lending Club and Prosper. You can lend small amounts to dozens of different people, diversifying your risk. Some investors on these platforms achieve returns of 7 to 12% per year, much higher than most traditional investments. Another strategy that the wealthy love is invoice financing. Businesses often need to speed up their cash flow and will pay investors a fee to finance their invoices. You buy an invoice at a discount, and later you receive the full payment, guaranteeing a profit without ever needing to run a business yourself. The best part, private lending is something banks don't want you to know about. After all, if you start lending money directly, they lose customers. But this strategy has been used for decades by investors who prefer to grow their wealth without making a lot of noise. But if lending money is a great way to build silent wealth, the next asset is even rarer. Imagine owning land that appreciates naturally over the years, without the need for any major maintenance. In this next section, I'll reveal this unique investment. Asset 6. Timberland investing. When we talk about investing in land, most people think of residential or commercial real estate. But there's a type of property that the wealthiest investors are quietly buying up. One that increases in value naturally, without tenants, renovations, or high maintenance costs. Unlike other types of real estate that require constant upkeep, timberland works completely differently. The trees grow all on their own and increase in value over time. The timber can be harvested and sold in planned cycles, generating recurring income without relying on any rental demand. And the best part is, the land itself also appreciates over time due to the demand for timber, conservation efforts, and regional development. During inflationary periods, timber prices tend to rise, meaning timberland becomes even more valuable. While cash loses its purchasing power, hard assets like timberland preserve and even increase their real value. It's no surprise that billionaires like Ted Turner and Harvard University's endowment fund have billions of dollars invested in this sector. And the best part is, you don't need to buy an entire forest to get started. There are timberland REITs like Weyerhaeuser, WY, and Rayonier, RYN, that allow you to invest in this market with small amounts. Imagine owning a stake in thousands of acres of productive forests without ever having to worry about managing them. Unlike stocks or crypto, timberland is a physical asset. It can't just disappear or be devalued by a sudden financial crisis. And there is always demand for wood in industries like construction, paper, and furniture. When financial crises hit, timberland owners often see their wealth protected, while others watch their investments crash. Investors who bought timberland 20 years ago have often doubled or tripled their investment without needing to do anything but wait for it to appreciate. It's one of the few investments where time literally grows your money because the trees just keep growing, regardless of economic conditions. Did you already know about the power of timberland investments? How many of these secret assets have you used in your own wealth-building strategy? Share your experience in the comments. I love seeing discreet investors connect and exchange ideas. Asset 7. Bonds and municipal bonds. While many investors focus entirely on stocks and crypto, the wealthiest do something different. They understand that the secret to keeping and growing wealth isn't just about making money. It's about protecting it. And one of the safest and most silent ways to do this is through an asset that pays steady interest and, in some cases, is even tax-free. Warren Buffett always says, Rule number 1, don't lose money. Rule number 2, never forget. Rule number 1. Fixed income bonds allow you to do exactly that, protect your capital while still generating an income. During economic downturns, bonds often increase in value while stocks and other assets fall. It's no surprise that the largest investment funds keep a significant portion of their portfolios in bonds. Millionaires understand that it's not just about how much you make, but how much you keep. That's why they often use municipal bonds, which can offer tax-free income. These bonds are issued by local governments to finance things like infrastructure, schools, and public projects. If you earn 5% per year in municipal bonds, that could be equivalent to earning 7% or more in taxable investments, depending on your tax bracket. The key is to combine different types of bonds. Treasury bonds for maximum security, corporate bonds for higher yields, and municipal bonds for tax-free income. It's like building a financial fortress that generates money consistently, no matter what happens in the market. Now that you know the 7 secret assets that true millionaires use to build their wealth quietly, the power is in your hands. From the steady consistency of automated ETF investing to the surprising profitability of self-storage and the security of bonds, each asset plays a unique role in creating a resilient, low-profile portfolio. You don't need to be flashy to be successful. In fact, the quietest strategies are often the most powerful. Thank you for joining us at Wealth Topmax. We hope these insights help you on your journey to financial freedom. Choose the asset that makes the most sense for you, start small, and stay consistent. Be sure to subscribe for notifications, and we will see you in the next video.